Imagine waking up on a perfectly ordinary Tuesday. You pour your morning coffee, grab your phone off the kitchen counter, and open your social media feed. Almost instantly, your screen is exploding with urgency. Rocket ship emojis. Green chart arrows pointing straight up, dollar signs flashing. A stock you have never even heard of in your life is trending everywhere, and your absolute favorite financial influencer, a charismatic guy with 1 million followers, a verified check mark, and a timeline full of exotic vacations is screaming in all caps that this is the next massive breakout. He says it is a mathematical certainty. A sure thing. The closing price yesterday was up 20%. The pre-market momentum is absolutely insane. You feel the panic rising in your chest. The undeniable, overwhelming fear of missing out. You log into your brokerage account, your heart pounding, and you dump $5,000 into the ticker symbol. It is a massive chunk of your life savings, but you trust the guru. For the next hour, you feel like an absolute genius. The line on the chart keeps going up. You start calculating what color car you are going to buy. And then, right after your lunch break, the bottom falls out completely. The chart stops going up and angles violently straight down. Massive red candles cascade across your screen like a waterfall. You panic and try to sell, but your order just sits there. There are absolutely no buyers left in the market. By the time the closing bell rings, your $5,000 is worth maybe $50. You didn't just make a bad trade. You didn't just get unlucky in a volatile market. You were the victim of a highly coordinated, brilliantly executed digital heist. You were the exit liquidity. Welcome to the dark, highly orchestrated world of modern financial manipulation, where a single viral tweet can vaporize life savings in seconds, and where the new wolves of Wall Street do not wear expensive suits, they post memes from their couches. This is not a hypothetical scenario designed to scare you. This is the exact, brutal reality of what happened to thousands upon thousands of regular, hard-working people who fell blindly into the trap of social media pump-and-dump schemes. And at the absolute dead center of this digital slaughterhouse are the puppet masters. Guys like Stephen Gallagher, whose devastating legal fallout has finally ripped the mask off how incredibly easy it is to rig the modern stock market using nothing more than a smartphone, a Wi-Fi connection, and a legion of trusting followers. The days of smoke-filled boiler rooms and aggressive cold-calling brokers pushing shady stocks over the phone are completely dead and gone. The new weapon of choice is the algorithm, and the ammunition they use to load it is your own unchecked greed. To fully understand how one anonymous account can literally fool the entire stock market, you first have to understand their specific hunting ground. They do not target massive companies like Apple or Microsoft. It takes billions of dollars to move those giants. Instead, they exclusively target microcap stocks, penny stocks. These are shell companies with microscopic market capitalizations, extremely low daily trading volume, and usually absolutely zero actual business prospects, revenue, or products. Because the trading volume is naturally so low, it does not take millions of institutional dollars to move the needle. A relatively small wave of coordinated retail buying can send the stock price soaring by 50 or 100% in a matter of a few hours. But the puppet master is not an idiot. He does not want to use his own capital to create that wave. He wants to use yours. Here is the exact, step-by-step playbook they use to steal your money. It always begins with the silent accumulation phase. The manipulator quietly, methodically buys up a massive position in a worthless penny stock over the course of several days or even weeks. He buys very slowly, very carefully, utilizing multiple accounts so he does not trigger any volume alarms or cause the price to prematurely spike. He is essentially loading the spring. Once his digital bags are completely full and he owns a massive percentage of the floating shares, the trap is officially set. Now, he needs to activate the hype machine. He turns to his massive platform, leveraging an account that has spent years artificially building credibility. Maybe he posts legitimate, helpful, basic trading advice 90% of the time just to build trust. He builds a rabid cult of personality. He posts screenshots of his own massive, heavily edited gains, creating a powerful aura of invincibility. His followers truly believe he possesses the golden touch. Then comes the signal. He starts vaguely tweeting about a specific medical or tech sector heating up. A few hours later, he drops the ticker symbol. He posts heavily doctored or aggressively misinterpreted charts that look incredibly bullish. He weaponizes financial buzzwords, screaming about a massive short squeeze, an undervalued hidden gem, or imminent merger rumors. He rallies his followers, calling them a tight-knit community, a rebel army, intentionally pitting them against imaginary Wall Street hedge funds to build a sense of righteous camaraderie. He tells them they are going to the moon together. The followers blindly rush in and buy. This sudden influx of money causes the stock price to violently explode upward. This is the pump. But the true, insidious genius and the true criminality of the operation lies in a highly specific, devastatingly effective tactic known as marking the close. It is the secret sauce of the modern manipulator. You see, a massive number of retail traders, complex institutional algorithms, and automated momentum stock scanners do not actually sit and watch the market tick by tick all day long. They heavily weight their analysis on one specific metric: the closing price. The final closing price dictates the entire narrative and sentiment for the next morning. If a stock closes at its absolute high of the day, it triggers massive bullish signals across the entire global financial ecosystem. The manipulator knows this vulnerability intimately. So, just minutes, sometimes literally seconds, before the closing bell rings at 4 o'clock Eastern Time, the puppet master unleashes a frantic flurry of aggressive, market-rate buy orders. He deliberately pays above the asking price. He intentionally overpays with a small amount of capital just to push the final printed price of the stock as high as humanly possible right as the bell rings. By successfully executing this maneuver, he guarantees that the manipulated stock will show up on every single daily top gainers list that evening. He has essentially hacked the market's own internal reporting tools to do his advertising. The next morning, the new wave of unsuspecting victims rushes in to buy, terrified of missing the rocket ship they saw on the scanners. The price gaps up aggressively, and this is exactly the moment the puppet master has been waiting for. While his followers are frantically mashing the buy button, the manipulator is quietly pressing sell. He unloads his entire massive position directly into the buying pressure of his own trusting followers. Because he holds so many shares, his relentless selling pressure eventually overwhelms the retail buying. Panic quickly sets in. Everyone rushes for the exit doors at the exact same time, but there are no buyers left. The stock price goes into a terrifying freefall. The manipulator walks away with millions, while retail investors are left holding heavy bags of a completely worthless company. Their money is gone, evaporated into thin air.